Okay, our next presenter from Suspicion to Action, Spot and Stop Government Fraud is Mr. Thomas Horne. He is a senior investigative auditor for the Legislative Auditor's Office, where he performs investigative audits as part of an investigative audit unit tasked with identifying and eliminating fraud, waste, and abuse involving public funds. As a senior investigative auditor, Thomas acts as the lead investigator on assigned audits, writes reports detailing investigative findings, and testifies about those findings in legal proceedings. Thomas has 11 years of experience handling fraud and forensic accounting matters as an investigative auditor with the Louisiana Legislative Auditor's Office and a forensic accountant at a regional public accounting firm. Please give it up for Mr. Thomas Horne.
Good afternoon, everyone. Can you hear me? We good? Cool. Okay. Well, today I'm going to talk to you a little bit about government fraud, kind of piggyback off of what Diane has been talking about a little bit, about what happens when things start going wrong. I've been a forensic accountant basically my whole career, whether that was in public accounting or working here at the Legislative Auditor's Office. I've done fraud investigations pretty much any way you could do a fraud investigation, either working on behalf of the auditor's office, doing it in litigation, doing internal investigations for clients. I'm very happy to be working here at the Legislative Auditor's Office. I think what we do is very important. And I feel very fulfilled in the types of investigations that I do here. So I want to start off by kind of just giving you an overview of what we're going to discuss today. And then I'll go into a little more detail. I'm going to talk about how investigative audits work, what kind of statutes, state and federal statutes, typically come into play in these situations. And then I'm going to start going into kind of some overviews of fraud in general, and then more specifically relating to government. And we're going to go through some example cases that our office has investigated and talk about some of the suggestions we have for detecting and preventing those types of situations. And then at the end, I've got some available resources you guys can look at if you want to. Most of it's free, some of it's not. I've got links at the end if you want to look at that. And of course, you can also contact our local government people and your auditor if you have questions about your specific situation. So you've heard a bit about what we do. We're all about accountability and transparency. And my role is on the investigative side of things when something really wrong is potentially happening. So what we do is we perform investigations of potential misappropriation of public funds or misuse or abuse of those funds. And that is from the state government on down to the smallest village or quasi-public entity that receives public money. And we also look at non-compliance with laws, so some of the things that Jennifer talked about, like the Local Government Budget Act and a lot of the statutes that Diane talked about as well. We also do a few other specific things for the legislature that don't really relate to fraud. So where does our authority come from? It comes from Louisiana audit law, which is starting with Louisiana Revised Statute 24513. So the top bullet relates to what we do with state government. We have the authority to conduct audits for legal compliance. Now, for the other agencies that aren't involved with state government, the local, the municipal, parish, town, village type entities and the quasi-public entities, we have to have a more specific reason to perform an audit. And most commonly, it will be under the second bullet point that there are allegations of illegal or irregular acts. So an allegation that maybe a town clerk is misappropriating funds in a certain fashion. The other most common reason why we'll start an investigation is there is a record of egregious control deficiencies or failures to comply with laws and regulations. Most of this stuff comes through our complaint hotline, but also comes from auditors, from legislatures, district attorney, public at large. It comes from every which way. There are a couple other specific kind of situations where we may also conduct an audit, and that would be if there are audit issues specifically about the timeliness of audits, and then if the Legislative Audit Advisory Council, which is a joint committee of the legislature and the legislative auditor agree that an audit should be performed. So when we perform these investigative audits, we don't have just complete access to your records, but it's really, really close. And what you have to keep in mind is when you're working for a governmental agency, these are not your private records. You are not a private business. And in a lot of cases, these records are public records that anyone could have access to, but in order for us to do our job, we specifically have access to those records. And so we're entitled to access those records, make copies of those records, and ask the employees of the agency to assist us in finding those records and explaining, how do your processes work. Now, if you guys run across fraud, you do have an obligation to report it both to us and to the district attorney. It's our job to consider looking into that, and also the district attorney's job to prosecute it should he decide to do so. They have a lot of discretion in that regard. So you are required to report it when you have actual knowledge or reasonable cause to believe that there was a misappropriation. That can get a little confusing at times, so you can certainly ask for some advice from your attorney about that, or also from our video. Oh, okay. All right. Mr. Morgan? See you again. Okay, so if you have questions about that, you can certainly contact our legal department and your attorney about, if it rises to the level that you have to report it to us, you can certainly, if you have just concerns, report those as well. There's also a requirement that you post a link to our hotline, and this is very important. In not just our organization, but really any organization, the first way people come into contact with fraud is usually through a complaint. So giving people a mechanism to complain, because most people want to point out something wrong, giving them the opportunity, especially if it's an opportunity to report it anonymously, then most people will say something if they see something. Everything that comes through our hotline, we do consider. Our management team and the investigative group will look at it, and they will assign us the most appropriate projects to investigate. In some situations,
We're just making sure y'all are good and awake. Try it now.
How about now? Okay. In some situations, we may refer those matters out to the external auditor for them to consider, or for another division of the legislative auditor's office to consider, or possibly other agencies. So, for example, if we were to receive a complaint about someone fraudulently obtaining Medicaid benefits, then we might refer that to the Department of Health. So I wanted to talk a little bit about the laws in Louisiana that are typically referred to in terms of fraud and noncompliance in those situations, the criminal statutes, because that will kind of help you understand the different ways that fraud can take place. Specifically, also what we look at in terms of, do we think maybe a criminal violation has occurred? And most commonly, we will start with theft. Which is pretty easy for most people to understand. In Louisiana, one of the ways you can steal money is through fraudulent conduct, practices, or representations. One of the other most common laws that we typically look at is called malfeasance in office. You may have heard of that before. Not to go too far into it, but when you intentionally do something you're not supposed to do, or failed to do something you're required to do, you could be committing malfeasance in office. Or also allowing someone you supervise to do one of those two things. So malfeasance in office typically requires this legal obligation that's violated. And most often we look at this statute, which is Louisiana Revised Statute 42-1461. So all of you who are public employees, public officials, elected officials, appointed officials, whatever, by virtue of that, you assume a personal obligation not to misappropriate or misuse public funds. And similarly, for people who work for the quasi-public entities that receive grant funds, you have a similar fiduciary duty not to misuse those funds. So malfeasance in office could be looked at as someone intentionally, misusing funds when they're required not to misuse funds, or also in terms of the Code of Governmental Ethics, intentionally violating the Code of Governmental Ethics. And then there are a number of, there are some specific malfeasance-related statutes that relate to the Legislative Auditor's Office. So one, the top one, is if you obstruct the Legislative Auditor's investigation or other audit they're performing. And that would typically be like refusing to provide records that you're required to provide to us. And then the other one would be if, for a period of 3 years, you have a disclaimer on your financial statements and the appropriate records are not being maintained or provided to the auditor, the agency head could be potentially committing malfeasance in office. Those are pretty specific. And then there are a number of statutes that go towards the specific acts that you might perform when committing fraud. So one of those would be falsifying records, forging signatures, creating fake documents, altering documents. There are some criminal statutes that relate to that. There are also some criminal statutes relating to corruption. So misusing your public position to obtain a wrongful benefit. Most people think of that as a bribe or kickback. You could also, in relation to this statute, have more of an extortion situation where you compel someone to pay you something that they're not required to. We don't really see that very often, but it is possible. And then there are a number of other ones, criminal conspiracy, when you have more than one person working together to commit fraud. You also have unauthorized use of a movable, which is kind of like theft, but in a more temporary situation. And some other ones, money laundering, trying to disguise the sources and uses of funds that were derived from criminal acts, and payroll fraud, which we'll talk about a little bit later. There are also some federal statutes that are commonly associated with fraud, and you probably will want to look at this top one first. It's 18 U.S.C. 666. So if you work for an organization that receives more than $10,000 in federal funding, and you acting as an agent of that organization steal more than $5,000 within this given year, then you could be stealing from the federal government. So they could use this statute to charge you in federal court. And this statute was enacted kind of to fix a loophole where federal officials were subject to prosecution under federal laws, but state and local officials weren't. And then they also have some specific laws that they'll use to prosecute acts associated with a fraud scheme. So wire fraud, mail fraud, false statements, lying to the government in order to obtain federal funds, those sorts of things. Next, I want to kind of go into fraud in general before I dive into what we see most commonly in government. And I'm going to start with the fraud triangle. I know you've probably seen it a million times. But you really do commonly see these three things in fraud situations. You're going to have an external pressure or a motive where someone needs money. Am I feeding back too much? No? Okay. There's going to be an opportunity. Often this is an internal control deficiency, like what Diane was talking about earlier. There's some gap in the defenses for the organization that can be exploited. And then there's a rationalization where the fraudster lies to themselves about whether what they're doing is okay, is really okay. And I went into a little bit more detail on those because some of these things we see a lot, and you'll often see a lot as well. And what we really look for is when we see clusters of these things. So if you see behavioral red flags in combination with control deficiencies, in combination with people doing other things like altering documents or trying to prevent other people from supervising what they're doing, trying to maybe override controls and do things outside of the processes that are supposed to prevent these things. When you see clusters of these things, that is when you really should be starting to get concerned that maybe something's going on. So under pressure, this is something that's unique to every fraudster, and it's considered like a non-shareable pressure. So statistically speaking, most people who commit fraud have not been in trouble before, not from a criminal perspective, not from a human resources perspective. And so they have this trusted employee image that they want to maintain, and that may manifest as not telling people about these financial pressures that they have. So they won't share about it, and one of the interesting quirks about people who commit fraud is that they're often terrified of the public exposure more so than going to jail. So they really don't want people to understand the reality of their situation. And this pressure is kind of the motive that takes your average rule-abiding person and moves them along the process of maybe considering committing fraud. And most commonly, we'll see living beyond your means, financial difficulties, addiction issues, people who are driving fancy cars they can't afford, going on vacations they can't afford, gambling we see all the time is very common, and it may be, family-related, divorce-related issues, health issues. Now the opportunity is where we really need to focus, because that's where we have the most ability to affect whether or not people will just think about committing fraud as opposed to actually commit fraud. So in many cases, these gaps in internal controls have existed for long periods of time. The most important ones being no segregation of duties, no management review, lack of internal controls. Those are big flashing warning signs that if somebody wants to steal, they could. And most commonly, these are the kinds of controls that will prevent someone from stealing or stealing very large amounts of money. They may catch something much more quickly if they're in place. But this also could be kind of a change in circumstance like Diane was talking about, when you have a new person come in that doesn't understand the internal controls because it's not written down. You may have a new management come in who wants to do things differently, or you may have a key employee leave and nobody knows how to fix the process or maintain the process without that person. And that can create this opportunity for someone to say, all right, I need money, here's my chance, I can go for it. But this really is what we can most control in terms of the pressure, financial pressures that people look at. We can't really do much to change that in government. We can't give people bonuses, we can't loan them money, we can't give them advances. And we can attack rationalizations by defining what fraud is, by having a strong culture and saying if you see something, say something, here's what you should look for. But really it's preventing the opportunity is where you get the most bang for your buck in either preventing fraud or reducing the size of fraud. And then the rationalization piece is that kind of final step in the process where someone gets over that hurdle of, I'm thinking about doing this, now I'm gonna do it. And it's kind of convincing themselves I'm not really doing something wrong. I'm still a good person, I'm not a criminal. I'm just doing what I have to do this one time to get over the hump. I'll pay the money back. If people really understood everything that I was doing, they would know that I'm not paid as much as I need to be paid. So I'm entitled to this, and no one's getting hurt. So it could be combinations of these. It could be just one, but that's kind of like the final step where this person lies to themselves and convinces themselves, I can do this, it's okay. So we tend to look at the Association of Certified Fraud Examiners as providing the most comprehensive guidance on how to investigate fraud. And every couple of years, they produce a study that details statistics related to fraud it's based on the observations of fraud investigators. And so they'll tell you the things that they most commonly see, how they most commonly detected, various schemes, what schemes are most common. And I'm going to go through that in general and then walk through that in government to explain what most commonly happens, and then we'll go into examples that we've investigated. So most commonly, you will have what's called an asset misappropriation scheme, which is where you'll have a forged check or stealing cash receipts. It's really kind of a theft scenario. Less commonly, you will have corruption, but those losses will be substantially higher. Fraud schemes are most commonly perpetrated lower on the hierarchy of employees, but losses get higher as you go up the hierarchy of employees because people who are higher up have greater access and ability to override controls. But statistically speaking, over 8% of fraudsters have no prior history, and there's no human resources history, there's no criminal history. They look on paper to be a model employee. And in most cases, there are no proceeds returned from a fraud. So here I put in the fraud tree from the Association of Certified Fraud Examiners. It kind of details all the kinds of fraud that you could see in a general way. I know it's kind of hard to see on here. They kind of break it up into 3 categories in general. Asset misappropriation is the one that you'll most commonly see and most commonly be worried about. Corruption is the other one. Financial statement fraud is really more of your Enron type scenarios where people are manipulating financial statements to obtain bonuses, and we're not going to see that as much or very often in government. So in terms of asset misappropriation, it kind of falls into a couple categories. You have theft of cash on hand, petty cash kind of scenario. Misuse of inventory or resources. So in government, that's commonly, say, a maintenance employee taking a backhoe and using that for work on their personal residence. And then you'll see theft of cash receipts and disbursement frauds. And those can get broken up into various categories. So in government, the most common that we see is corruption. So employees abusing their position for a wrongful financial gain. Most commonly, you would see this in the form of a bribe or a kickback, but you could also see some other corrupt situations like conflicts of interest. Next, after that, we have theft of cash receipts. They split it up into whether or not the theft occurs before the receipt is recorded in the financial records. It's kind of a distinction without a difference to me. You have some slightly different red flags there, but really it's theft of cash receipts. And then billing schemes would be the other most common one we really see. So fabricating invoices, making false claims for payment. And then you'll also see payroll fraud. Payroll fraud in government, really most commonly what we see would be people altering their pay rates. So they're getting paid a higher pay rate than what was actually approved by the Board of Aldermen or what have you, or they're claiming hours not worked. And you may see double dipping where people are getting paid when they're not actually working, they're doing another job. We see that very often with police officers. There are some other specific ones that you may also see, and one you might want to pay attention to is grant fraud. So, if you obtain grant funds, you have specific requirements to obtain and use those funds. And if you lie about that, then you could be committing a crime. All right, so for government specifically, most fraud schemes last about a year. and the loss tends to be about $150,000 a year. The largest losses are in the federal government, but after that, it's local government, which kind of makes sense to me in that you have less resources for segregation of duties and implementing controls. So it's a more target-rich environment than state government. And again, you'll see the largest losses with the executive functions, and then middle management and employees are about equally as common, but middle management steals more than lower line employees, which again makes sense. You know, your middle manager is exercising oversight of a cashier, whereas the higher up you go, the less oversight you have, and the more ability they have to override controls or falsify records. And again, and I've said it already, most commonly you will get complaints relating to government fraud through a tip. You also see internal audits as being next, and then management review. So having a supervisor actually like critically looking at transactions and reviewing documentation and verifying that procedures are being properly performed and transactions are appropriate. An interesting thing about government is that there's a higher rate of prosecution when people steal from the government. So you are much more likely to be prosecuted if you steal public money because it's public money. So what I find most useful from these statistics is what is most commonly found by investigators that tip them off initially. And living beyond your means and financial difficulties is always at the top. You know, if you see somebody driving a flashy car they shouldn't be driving or can't explain how they're driving, you know, that should be big flashing warning sign. And then there are some other ones that people don't think of as often that really come into play in government. And this next one is the unusually close association with a vendor. So when you're looking at corruption situations where you may have a kickback or a bribe, you're looking for these kinds of relationships where they may have that relationship and there may be evidence of that. And you may see that in combination with, down later, you have the wheeler-dealer attitude. So people who cut corners and are willing to violate procedures, violate laws in order to accomplish the goal they're looking for, kind of ends justify the means people. So when you see this wheeler-dealer attitude with the close association with the vendor and living beyond their means and some of these other things, there's red flags going off like, hey, this might be a problem. Some of the other ones we haven't talked about yet is the unwillingness to share duties. Anytime I see this, I start immediately thinking that something's probably going on. And this kind of ties in with what Diane was saying, in terms of cross-training and rotating duties. Certain fraud schemes require substantial manipulation of records in order to keep it going, and I'll talk about that a little bit later. And if you have other people performing your job duty, you can't hide it very well. So it's very common for someone to get caught because they went on vacation or got unexpectedly sick, and someone else starts performing their duties and sees, oh my God, what's going on? So anytime I see someone unwilling to share job duties, I immediately start thinking that's probably a problem. I remember one of the first investigations I did in public. I was looking at an accounting employee for disbursement fraud, for I think it was check fraud. And I started asking him, like, what's this lady like? How does he treat people? Does she blow up at people? Is she very protective of certain things? And they told me, like, she says no one else can process payroll. She goes and locks her office, and we don't see her for a day. And so my first thought was, all right, well, I'm going to look at that too, because that's probably a problem. And then another one is, these complaints about inadequate pay. So again, when you see kind of combinations of these, you may want to focus a little bit more on those. We also look at what control weaknesses are most commonly present that result in these larger frauds. And it keeps coming back to the lack of segregation of duties, the lack of controls. I can't hammer that enough. I know it's not fun to put together a procedure manual and focus on, risk assessments and what the gaps are in your internal controls, but that does make a big difference in preventing fraud and reducing the size of a fraud. When you see these really, really large fraud numbers, millions of dollars, it's usually because there's a complete lack of a certain control. And then, lack of management review, people who aren't really being critical about transactions. You may see it in terms of lack of competence or, a rubber stamp kind of situation, or it just may be the culture, which again, should be a red flag. So they also published some statistics about what controls are commonly associated with reducing the risk of fraud. And some of these I really like. Surprise audits, not giving people an opportunity to alter records or hide what they're doing. Also, again, management review and hotline, those always key. And then more training-related things, telling people, this is what we consider to be fraud. Look out for this. If you see it, say it. Here's how you report it. All right, so I'm going to go into a little more detail on the kinds of stuff we've investigated recently that matches what we've talked about already. And I'm going to do corruption and billing schemes together because the case I'm going to talk to you about involves both. So in corruption, you see this a lot in government, and on a basic level, it is the wrongful use of your position to obtain an improper benefit. It's most commonly associated with public servants, but it can apply to not-for-profits as well. So keep an eye out for that. And the issue with these schemes is that they're collusive, they're off book, they're often harder to detect strictly from an accounting control perspective. And that's why they tend to result in larger losses. So the most common variations you'll see will be bribery or kickback. So with bribery, that would be someone offering you an improper or corrupt payment to influence your official act. So for example, someone saying, I'll give you $10,000 if you give me that zoning variance I need. There's no contract. It's just do this thing I need that you're probably not supposed to do, and I'll make it worth your while. When there is a contract and the public employee receives a portion of that contract, that's really more of a kickback situation. And this really most commonly is found in purchasing, and it will coincide with type of disbursement fraud called overbilling, which we'll talk about next. And you'll tend to see kind of corollary frauds that come along with corruption that are intended to disguise what's happening. So you'll see money laundering, you may see tax fraud, and you'll see often manipulation of purchasing processes, where you're overriding controls, you're not abiding by bid law, you're not getting quotes when you're supposed to get quotes, you're splitting up transactions into smaller amounts to avoid purchasing thresholds, those kinds of things. There are a couple other variations. Conflicts of interest is one that's common in the not-for-profit world, where you have an undisclosed personal financial interest in the transaction that shouldn't weigh into the matter. So corrupt payments can be in any fashion that you can receive a thing of value, a financial benefit. So it can be cash, it can be gifts, entertainment, travel, paying personal expenses, receiving assets, non-fair market value transactions, hidden interests in business ventures. Any way you can receive benefit, it could be a corrupt payment. I know it's really hard to read. I was trying to get a lot on here. Really, when you're looking for indications of a corruption scheme, you're looking for those close associations with vendors, with violations of your purchasing policy, with unexplained cost increases, or a vendor receiving a contract repeatedly when they perform substandard work, when their cost increases don't make sense relative to the industry, and if you see collusive arrangements between multiple vendors. So I'm going to go over billing schemes a little bit, and then I'll get into the example that I'm going to talk about. So under a billing scheme, that's usually submitting a false claim for payment. So that may be completely fabricating an invoice from a completely made-up entity, or it could be inflating the value of services provided, or just trying to pass a personal expense through as a business expense. So this often involves the use of a shell company, and a shell company can be as simple as a bank account and a name, or it can actually be a legitimate business that's just operating in a capacity it shouldn't be. So the thing about shell companies is they can be legitimate and they can be illegitimate. So you may see like a legitimate construction company being used as a shell company just for a specific transaction it's being used in an illegitimate fashion just for that specific transaction, but otherwise it's a legitimate business. Or it really may just be a bank account and a name. And often in those kinds of situations, you'll see after the payments are made to that shell company, you'll see efforts to launder the proceeds coming out of that company to disguise the receipt of that money so that you can use it to buy things. Because public officials get scrutinized about how they spend money. They're supposed to report on ethics disclosure forms and things like that. So they may go to great lengths to disguise this relationship and what they're really receiving. And this can involve co-conspirators. You can have multiple shell companies. You can use straw owners to create a shell company. Sometimes people do it in their own name. And you'll often see that it doesn't look right. This company was opened just before they bid on a contract, and they have no other business operations. You start looking into the business, and they don't have a bricks and mortar address. They don't have a website. You don't know anyone that has done business with them. It appears out of thin air one day. And they also may be created to look like a legitimate vendor. So they may have a similar name, and they'll use the invoice format that the legitimate vendor uses to try and pass it off. So people will just kind of approve it without looking at it too critically. So the case that I'm going to talk about is one that I investigated a few years ago, and it involves the Office of State Fire Marshal. So what the Office of State Fire Marshal does, and they do a lot of things, is when there are hurricanes, they have search and rescue personnel that go out in boats, and they look for people that need help getting out of harm's way. And then while they're out there, they'll start inspecting structures for damage to see if people can go home. And so they'll deploy a lot of resources, and it's kind of an emergency scenario where things don't operate the way state government normally operates, in the absence of an emergency. And so what we found was that an employee of the Fire Marshal's office, Robert McCormick, used his position to improperly direct state funds of almost $850,000 to businesses that were doing business with or on behalf of his brother. And this involved emergency-related purchases of things like bottled water, renting porta potties, things that they were actually needed and provided. But they were purchased using the brothers' funds, and then the cost was inflated when it was billed to state government. And after these companies were paid, they then diverted almost $400,000 back to this employee, his brother's law firm, and then there were payments made back to the employee for his benefit and to another employee as well. And that's illustrated in this chart here on the left that's coming out of our report. You can see two of the entities involved, Gifts Unlimited and West Side Services. You have almost $800,000 going to these two companies, then the money flowing back through to the law firm and then coming back to the employee, and then also to Stacy Smith as well. She was a volunteer employee who was involved in some of these transactions. She was the wife of Lieutenant McCormick's supervisor. So this went to trial last year, and Robert and Thomas McCormick were convicted on a number of charges that included malfeasance in office, theft, money laundering, and the prohibited splitting of profits. That was one of those corruption statutes that I talked about earlier. They're still awaiting sentencing, and there were other individuals who were indicted, but they haven't stood trial yet. So this was what we call a pass-through billing scheme. So these are legitimate entities, but this is not what they normally do to a degree. Gifts Unlimited is kind of a small retail store, a boutique that sells clothing and accessories and whatnot. And then Westside Services, the owner is a hotshot driver, and he does like landscaping and maintenance type work. So they don't really have any history of doing this kind of emergency type service. And also Westside Services was incorporated about 2.5 months before Hurricane Laura struck, which is when most of this started. So you've got some big red flags there in terms of these entities that don't really have a history. They don't look like they're normally involved in this kind of industry. And they're showing some of the red flags that we're looking for in terms of maybe they're being used to disguise that someone else is involved in those transactions. Right. So I wanted to walk through a couple of the examples of specific transactions that we looked at. And the first one that we looked at was a purchase of bottled water. So while these employees are out there for the fire marshal's office doing all of this stuff when it's 100 degrees outside in the middle of the summer, they need bottled water. That's totally fine. And what we found was that Lieutenant McCormick's brother would use funds belonging to both of them to purchase bottled water and then sell it through Westside Services to the fire marshal's office at excessive rates. And they ended up charging around $1.41 per bottle for water that they purchased at an average cost of 13 cents per bottle. So they were paid $182,000 for water that cost around $26,000. And one of the ways they accomplished this was by circumventing the credit card procedures during an emergency. So there were credit card limits that were supposed to be in place where if there was a transaction above $25,000, it was supposed to be a purchase order. And Lieutenant McCormick would split these invoices up into under $25,000 amounts and process it on multiple credit cards to get around this $25,000 limit. And I wanted to put some of the specific documents that we have attached to our report in here so you can kind of see some of those examples. And I know it's not easy to read on here, but this is an email that Robert McCormick emailed to a grocery store requesting water, and he promised to pay on behalf of the fire marshal's office. And he told them, look, I can pay you with a check from us, or I can pay you with a credit card. Either way, I promise the fire marshal's office is going to pay you. But that's not what happened. His brother paid with a check from his law firm for approximately $3,500. And then this was billed to the state on this invoice, where that $3,500 is now $22,500. And what happened was this invoice ended up getting emailed to Stacy Smith, and Robert McCormick paid it with his credit card. So he went to the grocery store and said, I'll pay you with credit card, my state credit card. That's what he's supposed to do. But instead, he paid the substantially higher amount to this Westside Services entity. And then after these payments went to Westside Services, there were payments made to the brothers' law firm that were labeled typically as for legal services when there was no evidence of any legal services being performed. And then the law firm funds were used to make payments for the benefit of Robert McCormick, one of which was paying tuition for a child, and then also making credit card payments that exceeded the value of the funds that were used to purchase this bottle of water and other things. And also, in this situation, Stacy Smith ended up receiving $4,000 as well. The second example I wanted to put in here because it has kind of the hallmarks we're looking for of what we typically refer to as what's called bid rigging. It's a collusive kind of procurement fraud scenario. And so Bid rigging is when multiple contractors try to collude to steer a contract to one of the vendors at an inflated price, and then they share in the profits. So in this case, this was several months later with Hurricane Delta. Thomas McCormick contracted with a legitimate company for porta potties and shower trailers and things like that were necessary for them while they're out there doing all of this work. And then he emailed a quote from Westside Services to his brother, now at $145,000. He then also emailed a second quote from another company that we looked at called Emergency Logistics Solutions for $180,000, making Westside Services look like it is the lower bid. And then the following day, Robert McCormick requested a purchase order, and he said, I'd like a purchase order for Westside Services. It's the lowest bidder. I got this other one that's higher. And then the vendor that's actually providing the services didn't respond with a quote. So after the services were provided, the vendor was paid $97,000, or almost $98,000. Westside Services received the difference of almost $50,000. And again, we have payments back for the benefit of Robert McCormick where a car loan was paid off. So the red flags we had here were the appearance of these token bids. These were vendors that we were looking at in some fashion that were, again, all involved in the same transaction. And another interesting thing is with Emergency Logistics Solutions, it was created in between Hurricane Laura and Hurricane Delta. So again, just before it starts bidding on this work. Westside Services and Emergency Logistics Solutions, I don't think had ever had a contract before to rent equipment. They were primarily providing like individual services, hauling water and maintaining equipment on site. So we have the appearance of a competitive process, but the same vendors involved, so potentially a close relationship with vendors here. They're recently created businesses, and there were some irregularities in the documents that were submitted that really made no sense to me. So I'm going to show you some of the documents that we attached to our report, and you'll see what I'm saying. So on the left, we have an invoice from Just John's, the company that rents shower trailers and porta potties. This is the invoice from them to Thomas McCormick for the services that were actually provided. And on the right is the Westside Services quote that was provided to the state for the higher amount, the $145,000. You've got two different vendors with essentially the exact same invoice format. Even down to the line items are the same, but the prices are different. And then looking at the other one, on the left, you've got the invoice we just talked about for the bottled water for Hurricane Laura. And on the right is an invoice from, again, another company, Emergency Logistics Solutions, looks exactly the same. So that's pretty unusual, right? That you would have three vendors that have invoices that look the same, And there are other things that you could look for when you're looking for invoice irregularities, spelling mistakes that are in common, if they use the same line item descriptions, even though they're supposedly competing with each other, those kinds of things. So I think the key issues that made this possible was, one, there was this emergency environment, so procurement law had been suspended, and the credit card limits had been increased for these emergency scenarios. We had an override of existing control scenario where these purchases were split up into smaller amounts to circumvent that limit on credit card transactions. And we've got vendors working together, and the supervisor who was supposed to be looking at these transactions wasn't really critically looking at, is this an appropriate transaction? A couple of others that I wanted to go through. Sorry, yes?
Can I ask how the fraud was detected? Was it through like DPS internal audit? Was it through an LLA financial audit? Was it through supervision?
Initially, it was a complaint through the state. So the state had initially caught it and then reported it to us because they're required to. Yes?
Can you repeat the question for the...
I'm sorry. The question was, how was it initially, the fraud initially detected? Some other examples from some recent cases that we've looked at that are different kinds of billing schemes. With the town of Audit Springs, the former town finance clerk was recently indicted, and she apparently made $87,000 in personal purchases using the town's credit cards. So in this case, there's 4 credit cards that were used. One appears not to have been approved by the town. There wasn't segregation of duties. She was involved in too many steps in the process. And one of the big issues is that because of COVID, some of the controls they had in place weren't operating. So some of the management review that normally would have taken place wasn't taking place. And then there weren't receipts for over 80% of these credit card transactions. And some of these items were shipped to her home as opposed to town hall or some other office location. So that should be a big red flag to you that maybe this isn't a legitimate business purchase. And there was allegedly some alteration in the accounting system and on credit card statements to force a reconciliation. Similarly, there was another employee of the town of Audit Springs who was indicted for making credit card purchases and using a charge account at Home Depot. So this employee did not have a credit card, but used other employees' credit card numbers. And he made purchases at eBay, but according to the town, there weren't any legitimate purchases made at eBay. And then the other variation on that was the charge account at Home Depot. So there were supposed to be purchase orders for every transaction, but in this case, the purchase orders that were used were duplicate or non-existent purchase order numbers. And these purchases were made at times that would suggest they're not legitimate, so on the weekend or after business hours on days that he wasn't working. And during this period, he was purchasing appliances that have questionable use for a municipality while he's remodeling a house. So when I say, look for clusters of red flags, I'm talking about, this large financial interest where he's working on a home, looking for, do I see that in combination with other behavioral things or control deficiencies? I'm also going to talk a little bit about the city of Oakdale. So the former town clerk made 63 payments on her personal credit card using town funds. And the payments totaled $115,000. Again, we have no segregation of duties. She was involved in making the credit card payments, reconciling the statements. She had access to the accounting system, and there wasn't supporting documentation for these transactions. So I know I'm hammering the lack of segregation of duties and internal controls, and that's by design. Those are, if you take nothing else away from what I say, focus on looking at those things. There are other variations of billing schemes that we commonly see in government, and that's passing off various personal expenses as business expenses, so travel, meals, fuel purchases, lumping in your personal expenses with town expenses, so paying your personal cell phone bill along with the town's internet bill, and then also altering invoices to disguise personal, like construction work, as business or government-related work. And that can kind of be in a couple formats. You might see an inflated invoice for work on town hall, with part of that really for work on a personal residence. Or you may see, an invoice for strictly personal work that's then altered to make it look like it's for government purposes. And you'll see the same thing with vehicles and also potentially private businesses. So my suggestions to you about preventing or minimizing the harm from billing schemes is to focus, again, on opportunity, having segregation of duties, implementing controls and monitoring compliance with your controls. If you don't double check to make sure that your control is actually operating as it's intended to, then you don't know if it's really doing anything. And don't allow people to approve their own expenses. It seems kind of straightforward, but it happens a lot. And then trying to have active management review where you look at the sufficiency of transactions and looking critically at documentation. Also, and this is more On the corruption side of things, really focusing on competitive procurement practices. Now, if you have to comply with bid law, you have to comply with bid law, but also looking at, in situations where you don't, getting multiple quotes, and really focusing on the things that might jump out there. So I understand if you're in a small town and you only have one vendor that performs a certain kind of work, you're going to see that vendor all the time. But in other scenarios where you see the same vendors popping up over and over and over again, the cost of work seems excessive, the work's not acceptable, start to kind of pay attention to that, and if there are other things that don't look right there, you may need to dig deeper. Some other suggestions. Surprise audits are great. The job rotation and cross-training Diane was talking about, also great. And data analysis, or data analytics as we call it, that's another good tool that you can use. And I know it's a buzzword, and it may seem super complicated, but it doesn't necessarily need to be. That could be as simple as doing a budget versus actual. And when you look at how far over budget you are, does it make sense? Looking at, what vendors do we pay? Who do we pay the most? Why do we pay them the most? Does that make sense? With Gifts Unlimited and West Side Services, they were the top vendor paid by credit card, and it was by a large margin. And it sort of makes sense, but it also sort of didn't make sense. Yes, there's an emergency where you have unusual expenses that could be expensive, but at the same time, some of these expenses didn't make sense. And then also doing trend analysis, so looking at your expenses comparatively over time, over like a 3 or 5 year period. If you have a big increase in a certain expense, why is that? Does that make sense? Is there a reasonable explanation for that? If you dig into that, is that because of a specific vendor or a specific project that's monitored by a specific employee? And then the frequency of transactions below certain thresholds. So if transactions over $5,000, you need an approved purchase order before you can make that purchase. Well, look for transactions just under $5,000. And always be on the lookout for the behavioral red flags. The other kind of scheme that I really want to focus on is the theft of cash receipts, because that is very common in government. It's typically perpetrated by employees who have access. So if you steal cash, you have to be able to put your hands on the cash. If you're going to transfer funds from a payment processor, you have to be able to access the payment processor. And when that employee also has the ability to post transactions, they can disguise much more readily that they're stealing funds. So if you have that situation, you really need to take a hard look at that. This really kind of falls into two scenarios in government. You have a kind of theft of sales, which would be your fee-for-service kind of arrangement. That's not super common in government. And then more commonly, you'll see the theft of receivables, your fines, your fees, utility payments, taxes, all of those things. Those are a lot more difficult to conceal because you're taking a payment that's expected. So you have to then alter records to disguise that an expected payment wasn't received. Or if you don't disguise it, then there are red flags that, hey, my accounts receivable balance is ridiculous and it's very old. That doesn't make any sense. Or my reconciling items on my bank reconciliation is huge and it dates back 2 years. That doesn't make sense. So the ways people typically try to get around this would be by reversing transactions in the software system you use to collect payments, by writing off accounts receivable, and by physically altering bank records to force these reconciliations. And these actions, of course, leave their own trail. And we'll talk about that a little more in a minute. One thing you'll see less commonly is called lapping, where an employee will steal a payment, and then in order to process that payment, they'll take the payment from the next person and apply it to the first payment. That creates a chain effect where they have to keep it going on and on. So some of the examples we're going to go over, again, the town of Abita Springs. This former finance clerk transferred over $41,000 from the town's Venmo account to her personal Venmo account. She was indicted. This is a fee-for-service situation with a farmer's market where they were selling beverage tickets and renting tables to vendors. Again, here we have an absence of internal controls. We have a breakdown. She had access to the Venmo account. She had sole access, and the town wasn't monitoring what was collected through that Venmo account. So again, lack of internal controls, lack of management review. Here we have another one with the West Baton Rouge Parish Sheriff's Office. This was in relation to traffic tickets. The Sheriff's Office was missing about $160,000 in revenue, and the former traffic administrator did plead guilty to that federal statute I told about taking federal funds from an agency that receives federal funds. So again, we have no segregation of duties. This was a theft of cash scenario where she estimated she stole or took about $150,000 in cash. And when I said, hey, you'll see these outliers in your bank reconciliation, your accounts receivable, this is what I'm talking about, the hockey stick. So if you steal an expected payment, then you're gonna see this large accounts receivable, and it's going to increase exponentially over time the more you steal. So if you don't falsify documents to try and force that reconciliation, you're going to see the hockey stick where the receivable starts increasing exponentially over time. And in this case, there was a journal entry that was used to force the reconciliation. So you have a debit to accounts receivable and a credit to cash, which makes no sense. So when you're investigating these kinds of scenarios, when you run across journal entries that make no sense, you probably want to dig pretty deep into that. So again, what are you looking for? Segregation of duties, having access restrictions in terms of your accounting system, your softwares that you use to collect funds, access restrictions on your bank accounts. If you can, stop accepting cash. Restrictively endorse everything. And if you take money orders, don't take blank money orders. Issue a receipt for every transaction and investigate discrepancies with receipt numbers. And you should be able to reconcile your receipts all the way from where you receive it through to the accounting system. And if you can reconcile it, but you see suspicious activity, then you need to dig into that. The journal entries, if you see a lot of returns in your the software you use to collect payments, that would be an indication that you might have an issue. And last, I'm going to talk about payroll. Payroll is less common now than it used to be, primarily because a lot of it gets outsourced now. There's a lot of companies that will outsource a lot of the payroll function. So you don't see ghost employees anymore, or as much anymore, where it's just a completely made-up employee. You might, and if you do, look at the payroll register and see an employee that doesn't have any payroll deductions, you might want to look into that. More commonly, though, you will see falsified hours and pay rates. So town clerk changing your pay rate without the council's approval. Or recording hours that weren't worked, or potentially double dipping, claiming working while you're actually working another job. And you may also see, someone receiving, say, healthcare benefits, but not taking the deductions out of their paycheck, or potentially also deducting the funds, but then not remitting it. That does happen sometimes as well. And then you'll see people kind of sometimes double dipping on a fringe benefit. So they may receive a vehicle stipend at the same time they're receiving a take-home vehicle. So another example, here we have the city of Oakdale. The former clerk paid herself over $700,000, more than her authorized salary. Again, we have no segregation of duties here. She input payroll into their system and had the ability to authorize payments. And there wasn't any management review. There wasn't supporting documentation for the majority of these payments. So I'm kind of beating the dead horse. Segregation of duties, management review, internal controls. So focus on those things, and then periodically, checking are your payroll parents accurate? Does it match your human resources file? Are you seeing duplicate bank accounts on direct deposits? Those sorts of things. And consider using electronic timekeeping systems with access controls or biometrics. So I've got a few resources here that you could look at. Of course, our website we've already kind of talked about. There are a couple of others here as well. Association of Certified Fraud Examiners, they have a bunch of stuff on there. Some of it's free, some of it's relatively inexpensive. Typically, when I want to learn about something, that's where I go. They have this massive, 2-binder book called the Fraud Examiner's Manual that'll give you pretty much anything you ever want to know about committing fraud, or investigating fraud, or implementing internal controls to prevent fraud. And of course, you can always talk to your auditor and call our office. So with that, I've got a little time for questions, if anybody's got some questions.
Thomas?
Yes.
We had someone online ask a question. Was the last example involving Abita Springs part of the first example, or was that 2 different finance clerks committing the fraud at different times?
There's multiple findings. Yes?
From the time that LLA has these findings and does their audit findings report, from the time that LLA does their investigation and does the findings, how long does it take before the DA makes a decision? Is it a long process?
It varies. So frequently we will work with the DA to obtain records we need, and it depends on the complexity of the case. They can and frequently do indict quickly if they decide to, or they may have law enforcement perform additional investigative steps afterwards. So it can happen immediately, or it can drag on for a while. I think with Abita Springs, it was pretty close to after the report was issued that they were indicted.
Anybody else?
Awesome. All right, well, thank you for listening to me. It was a pleasure talking to you.